Welcome back to the Dividend Diplomats YouTube channel, everybody. You've got your boys here, Bert the Hurt and Lanny, the best dividend investing channel out here on the social network channels, guys. And I got a little bit of a dilemma here. I want to buy a certain stock, got some cash and capital set aside, earning 5%, but I also have 3 stocks that I've been itching to sell. And this could be the move to buy this one stock I've been looking for.
Before we talk about it, everyone smash that subscribe button. Give this video a thumbs up. Help us help you. But in all seriousness, let's have some fun. Let's reach 20,000 subscribers. And let's see what moves and grooves Lanny wants to make in his portfolio, what he's looking to possibly sell, and what he's looking to do with those proceeds. Because I was excited reading this, and if I'm excited, I can guarantee all of you are going to be excited with this one. I don't think you're going to see this coming.
So, guys, the 3 stocks that are obviously on the chopping block right now, one is Paramount, PARA, 2 is Warner Brothers Discovery, WBD, and 3 is that gosh damn old prior dividend king or dividend aristocrat, at least, in 3MMMM. In total, that's almost $7,500 of capital for me. I'm in an unrealized loss of $3,800 on Paramount, $1,600 of an unrealized loss in Warner Brothers Discovery. Man, I should have sold that thing right when I got it. And I'm up slightly on 3M by just a few $100, guys. In total, all of this only produces about $139 in dividends at an average yield of about 1.88%, obviously heavily weighted on the 3M side of things here. Yeah, go ahead, Bert.
No, that's important because when you take a step back and you look at it, when you look at it holistically, 1.88%, there's a lot you can do with that money. There are a lot of companies that could help you cross that 1.88% dividend yield hurdle. You're not trying to clear 5%, which would make it a little more limited without taking a step back. A lot of companies you can play with at 1.88% to help you achieve, and quite frankly, moving to companies that you feel a heck of a lot better about going forward than Paramount, Warner Brothers Discovery, and 3M.
Yeah, obviously 3M is cleaning up shop. They sold off Solventum. They're out of their, earpiece lawsuit.
Yeah.
They right-sized their dividend, quote unquote. They cut it after the spinoff of Solventum, pretty much in half, down to 70 whatever cents a share. So pretty interesting on their side. Paramount, they're in this bidding war, so I expect that share price to keep going up. And because of such a large unrealized loss and not having as large of an unrealized gain to kind of offset that with, or even a realized gain, I might hold off on doing anything with Paramount for now. I could still write covered calls because I have well over 100 shares on Paramount. Unfortunately, but we did, and I did sell West Rock stock earlier this year, which generated well over $1,000 realized gain. Net of some realized losses, I'm at about an $1,100 realized gain for the year, to where I'm really thinking about exiting Warner Brothers Discovery and 3M, and then really getting a lot of proceeds just from those transactions, a little over $5,000, approximately $5,300 in cash right there, Bert.
Yeah, so why is it important to clear the $5,000 mark with having that cash available? We talk about how we hate new positions. We talk about how we don't want to open up new positions in our portfolio. Obviously, this Laney's going to be shedding 3 total from WestRock, Warner Brothers, and 3M. But 5,000 plus is enough where you can make a substantial investment in a new company and feel like you're able to establish a full position right out of the gate. You're not going to spend months building something. You get a meaty position that feels good in your portfolio.
Right. Yeah, you're exactly right. And again, there's a good chance Warner Brothers Discovery has a pop coming up here. I'm sure of it. At $8 a share, it's like, why the heck wouldn't they get up to a little bit higher than that? I just don't know. And obviously, I'm not here to guess. 3M, I feel like there is a little bit more room for it to grow. But if you guys remember in the last video, I think we both said that if it gets closer to that 150 mark, was it, Bert?
Yeah, that was about right. That's exactly where we pegged it.
So they just crossed over the last 5 days the $130 mark. So I think when we were covering it, it was in the mid to upper 120s. So they've already climbed to the 130 mark. So that's kind of where I'm thinking of how I'd exit. I'd exit 3M as they continue to ride up. And then Warner Brothers Discovery kind of at least keep. I've got at least a few months to do this.
Yeah.
But there's a stock, right? There is a stock move that I do want to make.
Yeah.
And
So let's hear this, Lanny. Just to recap, you're thinking of ditching 3 companies, 2 in the short term, 1 in the long term, combining all your capital that you have from other dish sales that you've made. You have 5,000. Where do you want to put this 5,000? What's this magical company?
guys, we're talking about the stock Paccar, ticker symbol
Hmm.
PCAR.
Oh,
Talked about it enough on
sorry.
the channel. And, this is a stock. Again, I haven't had any new positions in quite a few years, I feel like.
Yeah, I've been the
Here,
one doing new positions on this channel. I've been much more generous with putting new stocks in my
there,
portfolio.
exactly. And, they're still under $100 a share. Just they're not like super undervalued, but not super, they're not overvalued by any means. But just with how the business is ran, I really like this company. I like their balance sheet. I like what they do with the dividend. They grow it. It's a lower current yield at 1.24%. But even if you averaged out the average of the 5-year special dividends, because they do a special dividend every year, if you just take the average dollar amount and add that to their dividend, their yield's actually well over 3%. So you do probably get a higher dividend overall with exiting any of the companies I talked about. And this stock just adds a little bit more of stability to the portfolio and fulfilling a need, I think, in the general economy.
I love it. Absolutely love it. So you're taking that. Remember, everyone, Lanny said in his funds, he's thinking of shutting things that had an average yield of 1.88%. When you factor in the current yield for Paccar, add in the special dividends, the yield's at 3%. So you're picking up 1 point, nearly 2% right there in dividend income, too. That's a huge pickup for a large amount of money.
And again, it's a big trucking business. So, the Peterbilts and the Kenworths out there, I mean, they're in there to haul a lot of stuff.
Hmm.
And hauling stuff, I don't think is going away anywhere.
No.
Especially in this, global economy and, instant economy as well that we're in. I mean, they're a $51 billion company, so they're not small by any means either.
No, I love this move, Lanny. I think I feel like you would feel better about the funds that were in here investing with a type of move like this.
Yeah. So again, not saying I'm a selling today, tomorrow on these stocks, but man, I could really use that capital for Paccar, which is where I want the money to go at under $97 a share at Paccar if I can. I'll have to see if I have any cash now, but I really don't want to buy like 4 shares with, $400. Like as Bert said, I really do want to make a few $1,000 of an investment into Paccar at the right price. And I feel like they're at the right price right now.
All right, everyone. So let us know. What do you think about this? Or would you ditch these 3 companies for Paccar like Lanny is suggesting? We would love to hear what you think about this in that comment section below.
Yeah, guys, it's all about trying to build that portfolio, making it so you can sleep better at night, grow, not only just have a passive income stream, but grow the passive income stream. And those 3 companies, not only are they not growing it, but 2 out of the 3 are cutting it, and one doesn't even pay a dividend. So when you think about it, that's 3 bad characteristics or 3 bad stocks that demonstrate bad characteristics that don't fit the portfolio, guys. So let us know if that helped you and maybe make your decision. As Bert said, like the video, subscribe to this channel, Bert, and hit him with the last line before we exit this mother.
You're either with us or you're against us, Jack.
Boom. That was Bert, the Hurt, and Lanny from the Dividend Diplomats. Over and out.